Hello guys, hello traders. Today we are gonna have a nice webinar about trading fake outs. But prior to my presentation, I will present you my colleague Mr. Mikhail. He will lead you through his presentation, but just be sure to stay with me, because today I will give you a freebie. I will give you a fantastic system where you can trade fake outs. So this is a freebie from me, and I will show you how actually to trade a possible fake out. So be sure to stay with me after Mr. Mikhail finishes with his presentation, and be sure to remember this correctly, because this will be very, very important, especially in markets like this. Mikhail, you can continue. I will continue after you finish. Thank you very much.
Thank you very much, Donat. Thank you very much for introducing me. Hello to everybody out there. Once again, it's going to be a great webinar today on trading fake outs. But before we do that, my name is Mikhail Onachov. I'm a client relationship manager for Admiral Markets. In essence, my job is to create the best possible trading environment for you. You can always reach me on my email, my Skype, or you can add me as a connection on LinkedIn. Today I wanted to speak to you about something which is very important for every trader. I would like to speak to you about motivation. In one of my previous webinars, we've spoken about that motivation to do the right thing every day is sometimes even a lot more important than skill. You have to come to trading every day, you have to be prepared, and you have to make every good decisions all day, every day for a very long period of time to achieve your long-term aims. And in order to motivate yourself, people use a variety of techniques. I'm going to talk about some of those techniques and how you can utilize them to make you into a better trader. And I'm going to base my presentation on the word of Professor Richard Wiseman. I'm pretty sure that most of you will agree that just his name suggests that he's quite a wise man. So here are a list of most frequently used techniques that allow people to motivate themselves. You can make a perfect plan. You can motivate yourself by focusing on someone you admire, like Warren Buffett or Richard Branson. You can tell other people about your goals. You can think about all the bad things that will happen to you if you fail. You can try to suppress negative thoughts, rely on your willpower, and record your progress. Well, out of those techniques, only 3 techniques are scientifically proven to be efficient. Let's take a look at them. You can make a perfect plan, you can tell other people about your goals, and you can record your progress. Those are the 3 techniques that will help you motivate yourself to be successful in achieving your long-term goals. So I wanted to speak to you about the educational program we at Admiral Markets have. It's called Trading Camp. In Trading Camp, we'll teach you to make a perfect plan. This is a 3-week course program where every day you'll receive special assignments that will prepare you into a better trader. You'll receive strategies, you'll know how to use analysis, fundamental, economical, technical. You'll be able to even have live conferences with other traders who are professional traders. This is all going to be incorporated into a 3-week plan, which we will give you by sending you emails every day with an assignment that you can finish in less than 1 hour. So you're not really distracted from work or anything else. Also, you'll be able to speak to a personal trader camp mentor who will be able to speak to you about your progress as you make it. You'll be able to answer questions and maybe help you stay focused on your long-term project. Also, you'll be able to record your progress by using a special custom-made Admiral Markets trading tracker. You'll be able to track all the strategies that you use with the profits, and you'll be able to see which strategy and which trading style actually suits you the most. So you'll be able to make a little research on yourself in those 3 weeks to establish what strategies work for you and which strategies do not. All of that you can do in Admiral Markets Trading Camp. To apply to Trading Camp, you have to send an email to camp@admiralmarkets.com. As I said, it's going to be a 3-week course, everyday assignments, strategies by professional traders, Donat is one of the contributors, performance tracking, personal coaching, and of course, free literature is going to be supplied. All you have to do to get enrolled into a trading camp, you have to write a short essay on your Forex aims, 100, 200 words, and you have to open a real account with a minimum deposit. In some countries it can be as low as $10. In some countries it has to be about $200. It depends on the region. But those are two requirements needed for you to enter the trading camp. Once you do, you'll be able to start receiving your assignments next Monday, which is the 4th of November. So if you would like to enroll, write me at mo@undermarkets.com or straight to camp@undermarkets.com. I'll be waiting for your emails. Thank you very much. I'll now pass the floor back to Ninad, who will continue with his presentation on trading fakeouts. Thank you very much, guys.
Thank you very much, Mikhail. Excellent. I will show you my trading fakeout system or strategy, how I do it from time to time. But just prior to that, I want to stress out one thing, because I had many questions about yesterday's setup on euro dollar, especially on their basically it was a breakout. It was not a fake out, it was a breakout. I will show you here is the analysis. This is the analysis for yesterday, euro dollar for October 29th. And this is what I wrote prior to that jump, and prior to that what happened yesterday. So if you read this analysis thoroughly, because I had a trader who basically asked me why I didn't put my entry and my entry level at the same time when I did my entry. But when I trade, I cannot post then if I trade a breakout. But I wrote this, and this is the thing that should have been read between the lines. 37.50 to 70 is the range currently, and we will see whether it will break to the upside or downside as a potential breakout setup. If you mark the levels, this is the level which I had on my charts. Of course 70, because we had double top. Okay, we had double top. We also had a previous high which sits here around 70. So that was basically a range until then. And when do we trade breakouts and fakeouts? We trade it when we have a ranging market. Okay, you know that. The same is, this is a breakout setup. Fakeout setup is completely different, because we will not have setups for fakeouts. We need to trade it. So whether it's only if we trade breakout or if we trade fakeout, okay? So this is the thing I had on my charts. This level 70, and I wrote here 37.50, 70 is the range, and the range was that 37.50. It was also my red level, and 37.70, which is not my level, red level, but that was intraday high, so it was a range. You see ups and downs, so that means that we are in a range. Whether this is 15-minute or 5-minute chart, it doesn't matter, okay? I think it's 5-minute chart, but what the thing is, the main thing is, I had opened a trade prior to that breakout, and when I spotted the breakout, when I saw that the price is gaining momentum around there, because it was a really fast momentum, I got also in a second trade 2 or 3 pips above this breakout of the resistance. It was basically a happy trigger trade. Why I did happy trigger without breakout pullback continuation? Because we had a range all day. And my presumption was, because there was a conference going on, I think ECB, one of ECB members was speaking about euro rates, and he mentioned that there wasn't to be any new cuts for that particular currency. So euro also jumped in on that news, but I also wanted to exploit that range. So because of that, I saw that this level was very hard to break, and because that was a big support, I was long into support, and that was normal thing. 7-8 pips above the support I had my entry, and after the 70 was broken, that was my breakout setup, and I closed it just before 38.70 85 was hit. So I got some nice 20 pips, but that was basically a trade that lasted around a minute, or maybe even less. But the thing is, also, if you remember, and you need to read the analysis correctly, okay? 37.50. Also, we had a breakout later. If you watch the price, it reversed off that level, and then it broke 37.50 because 1, 2, 3, 4 times the level was not broken, and on the 5th attempt, of course, if this level was broken on our 4th or 5th attempt, it was logical that if it reverses, it will also break this level to the downside. So also 50 level was broken to the downside, and price went down even just below this my red line and 50 level of fib retracement. So it went to 37, I think it was 37, 36 or 5 or something like that. But that was also nice setup for some 15 pips, okay? And if you trade breakouts, you need to do it with momentum. And that is why I always, if I have set up in my analysis, I will always tell you that, okay? I will always tell you that. You need to also watch in my charts, because if you see that my red level is there, and you see this analysis, and you see, you know that you can have a nice setup around there, because we are already at the support, okay? If you want to position yourself, you don't want to go short here. You want to go long, okay? And if you spot a range, like we had a range, 15 minutes and 5-minute charts, this was that breakout that get us really a nice setup. Also, the breakout of this level was perfect, okay? And that was concerning yesterday analysis. I wanted to tell you that. Now let's switch to our special presentation today about fake outs, and I will give you, be sure to stay with me, because after this webinar I will give you a link where you can download complete template and indicator for fake out system, okay? And this is very, very important to you if you want to trade, if you want to learn how to trade fake outs, because trading fake outs is basically a completely different thing than trading breakouts. And this, what I will show you, you just, well, you know, many people would pay for that a lot money, okay? But that is one of my presents for you, and I will just give you, after this webinar, I will also give you a link where you can download complete indicators and a template for fake out trading, okay? Just before we continue, our risk disclaimer. Of course, every Admiral Markets webinar starts with risk disclaimer. Be sure to pause the video, or if you're watching it live, by accepting this risk disclaimer, you accept to continue further with me, okay? That is absolutely normal thing. So today, agenda is what are fake outs, difference between fake outs and breakouts, and how to know when a possible fake out will happen. And then, of course, I will give you, and I will explain how to use trading fake out system or strategy. So you can try to trade it solely. It's up to you. I think that you can generate a lot of pips if you trade fake outs only. So that this, if you want to trade fake outs, remember that this should be maybe the only strategy you trade, because this is not counter trend trading, this is not breakout trading, this is completely different thing. This is not even scalping, okay? Fake out setups are completely, it's very easy, but I know that you don't know how to trade it, because rarely, I don't know many people who know how to trade it correctly, and I think that many people just avoid trading breakouts due to possible fake outs, okay? But you are lucky today. What is a fake out? Fake out is, in one word, false breakout or a fake breakout. It just happens many times, and I know that you have experienced that, and I know, I'm sure, that you are very nervous and you are very mad when that happens. Let's say that this is the level of support, and let's say that this is the level of resistance, and price is hanging around in a range, okay? And you want to go long. You know that this was a daily high, and you know that this was a daily, and this is the daily low, okay? Daily high, daily low. The price is congesting. It makes a form of a triangle, but it doesn't go anywhere. It's still somewhere trapped between those daily high and daily low. And what usually happens is, during Frankfurt fake, 1 hour prior to London Open, and during first 3 hours of each session, it can happen that the price spikes up. You go long here because it's logical that if daily high is broken, the price will probably continue to go up, but then it goes 5 pips or a couple of pips in your direction, and then immediately reverses, and you lose your trade. And what is even worse thing, it can break the low, then you switch your trade around there, but then yet again it just gets back into the range. Those 2 points swing high after the break of daily high or important support and resistance level, and the break of daily lows and important support and resistance level, and subsequently reversing, it's called a fake out. Okay? So, false breakout is fake out. Usually when market jumps into one direction, it will touch the support resistance and then reverse. It can be avoided, but also it can be traded. Yeah, you got it correctly. These setups can be traded. Okay? It represents a point in the market where the price moves dramatically up and down, and it might start as the new trend is rising. Then suddenly it drives the price back down, hitting your stop. This happened also today. This is Euro USD chart. After ADP announcement, what happened was, we got our daily, we got our highs, we got our lows 3 hours prior to trading ADP or ADP release. What happened is, you probably would like to go long after this because news for dollar was very bad, and subsequently the price really got above this level break. But then what happened is the price reversed, hitting 40 pips drop and probably hitting your stop loss. And then this also, you probably think this can happen, this will drive the break of this level, will drive the price lower, but what happened is the price got back into the range. So this point too and this point here is fake out. This was not a breakout, and this was not a valid breakout. So this is to be avoided, but this is to be traded also. I got into a trade subsequently, but I got into a little bit higher range. I lost this trade, I need to admit. But after I used my fake out template, I saw what was happening, I reversed the trade, and I got 15 pips, but leveraged pips, not standard pips. Okay? And that is why I use a fake out strategy. Okay? I should have used it here, but I was really thinking about if it breaks this high, it will really shoot out at least to 3800 level. But it was a standard fake out. This was also standard fake out. And we got back into the range, okay? So by using the fake outs, by exploiting fake outs, you can make nice profits, you can make nice pips. And I really did it today on this false breakout. Difference between breakouts and fake outs. Fake out spikes first in a desired direction, then completely reverses the trade. That means that, again, a valid breakout is this. This is the level of resistance, this is the level of support. When the price goes up, it can retest the level, and after this level, the breakout level was broken, it proceeds to go up. This is called breakout pullback continuation, and that is valid breakout. Valid breakout also can be this. You want to trade it and it spikes up and then it goes to the upside without any retracement. That is also valid breakout. What is not breakout? What is fake out is the price goes and breaks the important level and then switches back into the range. This is also a fake out. And what usually happens, the price will continue to go in a contra direction. Okay? After initial fake out, the price will continue to fall, probably breaking the range and breaking next support or resistance levels. Okay? And what is the worst thing? It can lead to stop hunting. This is what big players may do if they want to stop loss hunt you. Okay? So what does it mean literally? And you know it many times it has happened. It has happened. It has been happening. Because if you trade breakout of this important daily level or Fibonacci level, fake out is this, and your stop, let's say, is here or here, they will stop loss hunt, do a stop loss hunt, and price may go way, way down. And that stop hunting, if you trade without stop loss, will be the probable end of your career as Forex trader. Or maybe if you have money, you can put more money in your account. But you should avoid that by all costs. That is why I'm here to help you. Okay? That is why you have me to teach you and to help you with money management and with different strategies which you can use when trading Forex market. Fake outs and fake out usually happens during the first 3 hours of each session and during the first 30 minutes. Okay? So if you want to trade it, the answer is this. We trade it during first 30 minutes and many times it will be during the first 15 minutes. Okay? So it's during the first 30 minutes, or it can happen even during the first 15 minutes. It can be really fast. But after the initial 30 minutes pass, we don't want to trade it anymore. Okay? After it goes to 35th minute, we don't trade it. Only during the first 30 minutes. Because then is when traders got into their positioning. During the last 30 minutes, some traders will probably, if they trade hourly candles, they would exit out of trade, okay? So this is crucial. During first 30 minutes, fake out happens and we trade it during the first 30 minutes. They are very common after some strong news. Always pay attention to, let's say, Forex factory calendar. And if there are very strong news, they can spike out and then reverse. So watch out for those spikes. When do they happen? They happen and tend to happen in ranging markets, usually at the top of the market and the first 3 hours of each session, at the open of the market. What does that mean? That means that we trade the first hours of London session and we trade the first hours of New York session and we trade solely USD crosses. If you want to trade Japanese crosses, I didn't do fake out trading on Japanese. You can try on demo and then tell me if that is good. I don't know. But only during the first 3 hours of Asia session, not Australian session. We want to see Asian session. But the main thing is that the system and strategy is structured to work during London and New York, and London and New York cross session. And we trade dollar crosses. GBP, Euro, some from time to time New Zealand, Swiss C, Japanese yen dollar, that means dollar crosses during London and New York. And I say that here, if you trade the USD, then it's the first 3 hours of London and New York session. And that is where this strategy works best, during the first 3 hours of London and New York session. Japanese currency pairs tend to have less fake outs during London and New York time. And usually traders position to trade Japanese yen during Asia session around 2 o'clock Central European Standard Time, okay? And fake outs, if you don't know how to properly manage them and trade them, usually lead to loss of the profit. So this will probably lose your money. But trading it the way I do will probably give you pips from time to time, of course. Now, how to trade fake outs. This is the system. And this is the complete strategy. I forgot to also to write on this example, sorry, keep this card. Yeah, I want to say another important thing before this happens. Mark also yesterday or daily or today's highs and lows. Because we trade intraday, I would say today's highs and lows. Okay? And this is how we're gonna do it. Let me, okay, this is it. First, mark whole numbers on the chart. Big banks like whole numbers. Big bank traders, I've told you that multiple times. Okay? What they do, they like those numbers, 0, 0, 50. They like those numbers, okay? Mark them on your charts. I have all indicators except today highs and lows. So if you trade London, then if you want to trade London fake out, then what you should do is to mark Asian high and Asian low prior to trading London open. This is also a nice system for London Open. And because it's a fake out, usually from time to time London does really fake out spike on the charts. But a good thing about this is you don't need to trade it. There are certain rules which must be respected in order to trade it. So you won't trade it blindly, okay? You won't, by trading this system, this strategy, you want to know how, when a fake out is happening. And I will show you, it's really not a problem. It can be very easy and it can be very, very fruitful. Mark today's highs and lows, mark all numbers on the chart, big bands, like all numbers. I have indicator, I have included indicator. Just, you need to, as I say, need to mark today's highs and lows. So that means Asia session. Asia session. If Asian high was this, you mark it with a red level here. If Asian low was this, you mark it on a red horizontal level. Okay? And then you will have today's highs and lows prior to London. Let's say that this vertical line means that London is gonna start. And this is Asia. So mark the high and mark the low. And that will be also important levels on your chart. Then what you should do, we should always have candles blue and red, because fake outs will be easier to spot. Candles should be blue and red. Don't forget that. I will answer your question later. I will show you also what you can use for those timings. But it's very important, okay? Blue and red. Blue candles are long candles, okay? Blue candles are bullish candles. Red are bearish candles. Simple, very simple. And this is also crucial. It is solely done on 1 hour time frame. The strategy is solely traded on 1 hour time frame, okay? Don't forget these rules. These rules are very important. There are any distinctive and distinction between what I say and rules. You need to respect this, what is written here. Don't do your own rules. This is a very mechanical way of trading, because we are trading fake outs. We don't trade charts, we don't trade intraday, we don't swing, we don't scalp, we don't break out, we don't do counter trend. Well, maybe a bit of counter trend because it's a fake. When the market opens, we need to see initial direction, then reversal. If we are going long, we wait for the first bounce of the important level and candle color switch from red to blue. I will show you also on the slide, so you will know what I am talking about. If you are going short, we wait for the first bounce of the important level and candle color switches from blue to red. We trade first 3 sessions. This is also important. During first 30 minutes from the start. Target price is next support resistance levels on anywhere from 10 to 25 pips. It's your discretionary call. Stop loss 1 to 5 pips below last low or of the highest high lowest high. That means if we are going short, we will place our stop loss 1 to 5 pips above this candle, which we trade highest high, above the high, okay? And if we are trading long trades, we will place our stop loss 1 to 5 pips below the candle's low, below the current candle, okay? And I will show you that practically. By trade example, okay. First, watch these levels. This is the indicator which will mark Fibonacci levels. On the template, it will show blue and red candles, okay? No additional indicators are needed for this fake out strategy. Let's say that this is the start of a session. But usually these R2, R1, support 1, support 2 lines and pivot points will print you at the London Open. You just check the indicator time zone, and then you need to have it marked. Admiral Markets platform is great because now it's in sync with London Open, okay? If you use, and I presume that you use Admiral Market platform, it gives you the right time. So automatically it will give you, this is the start of London, okay? Here. And now on the platform, it is 9 o'clock. Okay, no, it's because it's 8 o'clock. 8 o'clock on the platform. It's 9 a.m. my time. It's Central European Standard Time, and London time is 8. Okay, on the platform. So what will happen is you mark these lines. This is what indicator will mark it automatically for you. Okay, and then what happens is, let's see this example. First, the candle was, okay, it was red. But then what happened, it switched to blue and went up. And in London session, this is the blue candle. The blue candle went long there, but as soon as the candle turned red, we opened our short trade. And it bounced to the downside. Also here is a good example. We neglect this candle because there was not a fake out. And after this candle, the candle started to go down, okay? You see it by this week. The candle started to go down. And it go down. You wait. And this, in the time when it was forming, this candle was red, okay? This candle was red because it opened there, went to the downside, it was red, okay? And you wait for this. You won't trade until it makes a first change to the blue color, okay? So you wait for the candle to switch from the red to blue, and then when it switches to blue, when you see that the candle switched, the first pip switched from the red to blue by 1 pip, you go long, okay? You go long. First 3 sessions, first 3 hours. This is also a fake out because the price went short here, and the end of the hour it went to the upside. But we trade first 30 minutes. If it doesn't happen during the first 30 minutes, we do not trade. I think that this is very clear. This is how you should trade fake outs. This is the only way how you can trade fake outs. I personally don't know the other way, okay? You see this candle, blue, here. This candle was blue because in the time when the candle opened, it went here and it was blue. It opened here, it went as the blue color, and then it was rejected of this important level and got red. The first pip, when it changes to the red color, you trade it to the downside. That is that you know and you presume that that is a fake out. This candle also here was red because it opened there, and when it goes down it is red, okay? But subsequently, during the first 30 minutes, it switched to the blue color, and then we don't trade it while it is red. We want it to see that it bounces off the important level and turns the other color, okay? I think that the rules are very clear, and I think that you understand what I'm talking about. So we want to see a fake out. Fake out is only if we see the first initial price action. Here it's a red color, and then after, if it jumps and it switches to the blue color, then we know that that is probably a fake out. And you see the reaction. It was this candle here, or also It was red by the time it was forming. It was red, okay? But after the initial short trade, you don't open the trade. But let's say it went short, because it went short. You see this wick. That means that the candle went short after it opened. You don't trade it. And you will trade it here when it switches from the red to blue color, okay? If it happens during the first 30 minutes. This also here opened as a short. It went down and it was rejected around this red pivot point and it turned to blue here. You can trade it to the upside. This candle also turned, it was blue because it made this wick, and then it went down. So basically what you want to see is that this is today price action. This candle here was prior to London Open, and after the London Open it was a fake out today at London's Open, okay? Because this candle was this big blue candle. First it went as a red candle because it opened here and it made a wick. But before we know that it has made a wick, it was red. It was a short candle, red candle, okay? And after it jumped of this support, it doesn't have to be to the pip. 5-6 pips above the level in this scenario is okay. By the time it jumped, you see it has formed a wick. And where should we trade it? We should trade it here at the first color change from red to blue. So when this candle goes from the red candle to blue candle, around there, it went blue, okay? Then we trade it, and you see the movement. Perfect. First 3 hours, also this candle went blue went long at the first open. But then it subsequently, it went red. At least you could have made some 5 to 10 pips on this candle also, because this is also fake out. It was blue and then it switched to red and go there. Also this candle, it went, you see here, and you see this candle. This is a perfect example. It went to the long side and then bang, it was rejected and we traded there, okay? So we want to see price literally. We want to see price going into the other direction, and then when it changes color, we trade it. And this was really the perfect example of London Open. It went there, it was rejected, and it switched color from red to blue. And we were speculating that this is a fake out setup. And this is how we trade fake out. Okay? If you're confused by what time the session is, you just Google Forex market hours, okay? This is my favorite. Well, I know it now in my head. ForexTimeZoneConverter.com, okay? I will type this address. ForexTimeZoneConverter.com, and you copy that. You determine your time zone by here, Euro, Berlin, Europe, London. So you need to see, you need to know your time zone. So today we are Central European Standard Time. It's 6:44 and it's 6:44. Frankfurt opens at 8 a.m. my time. London opens at 9 a.m. my time. Okay, that is 8 a.m. on. That is 9 a.m. on Admiral Markets platform, because it follows London time. London opens at 9 a.m., okay? And that is important if you want to trade London open. If you're living in my time zone. If you live in other time zone, then you should switch whatever time zone you're living in. GMT time zone is this time zone. London in GMT time zone opens at 8 a.m. In my time zone, now it's 6:45, it opens at 9 a.m., okay? So be sure to know when to trade fakeouts. The first 3 hours of each session. New York opens, I will again switch to our time, okay? 1 p.m. Now we shifted the time from summertime to wintertime, and we shift 1 hour earlier, okay? This is the most accurate time zone converter. This is not accurate. I know, I tested it, and I know that this isn't accurate. Forex market hours. They have some, I don't know how they calculate the time, but this is not accurate. These market hours on this side are accurate. So, in my time zone, now it's 6:46 p.m. London starts at 9 a.m. and this will be until summertime shift, okay? Until summertime shift. London is closed now, you see that. New York is still open, Sydney, Tokyo. This is very, very important, okay? Now, what is the time in London? It's 5:47 because London is GMT and we are GMT +1. Okay, guys? So, our platform follows London time, Admiral Markets. Okay? It follows London time. It doesn't, it's GMT now. Some days ago, I know a week ago, we were GMT +2, London was GMT +1. This is really important. Please have that in mind, okay, guys? Have that in mind because I know that many traders got confused when time zones are changing. I will write it down now, so you will have it here also. Winter time. London is GMT, okay? Our platform is GMT. I live in Belgrade currently, and Belgrade is GMT +1 Central European Standard Time, okay? Summertime, okay, this is London is GMT +1. Platform is GMT +1. Belgrade is GMT +2. Central European Standard Time, okay? And this is the answer to your question. What time is the Asian session? Aaron, or you can see the name, Aaron, right? This is the things when you want to trade breakouts and fakeouts. It's very important to know the time of your platform and to know the time when winter time changes and summertime changes, okay? Use these converters. You have many regions out there and you can find your city where you live in, and then you will see what time zone you are, okay? Don't use other converters because this is the accurate one. And now let's get an overview of this system again. And please, guys and traders, if you have any questions concerning this fake out strategy, if anything is unclear, I will repeat it again. So mark all numbers on the chart. Big banks like all numbers. Mark today's highs and lows, okay? Today's highs and lows. I told you how to mark it. find Asia session and prior to London. You need to wake up 15 minutes prior to London Open, okay? And mark the Asian high and Asian low. That will be your current high and low, okay? Because we are trading London Open and next 2 hours after London Open, we need to know current highs and lows, okay? Then we need to use Fibonacci levels, so we need to mark them. I included the indicator for you, okay? It will mark this, and be sure that these levels are also pointing to the when they first show on your charts, okay? Let me zoom in. When they first show on your charts, they will be small. They will be like this. And how the time passes, they will go like this. So be sure that this point here marks the London Open, okay? Okay? And then it will be very, very accurate, Fibonacci pivot points. Yes, these are ones including daily highs and daily lows prior to London Open. That means Asian high and Asian low are key points for keeping watch on or as reversal points. And also these levels, 80, 00, and 50 levels. The indicator will mark them for you automatically, okay? 0, 0, and 50 levels, because those are big numbers, okay? Whole numbers, exactly. Whole numbers, yeah. So Asian high and low prior to London session, Fibonacci numbers, and 0, 0, and 50 levels are the only thing you can have on your chart. You don't need anything else. Daily pivot points, Camarilla, or I don't know, maybe other indicators. Okay, you need this indicator, which marks Fibonacci pivots, along with pivot point level, whole numbers, and Asian high-low prior to London session. And I tested it and I traded it live many times. And I need to say that this is my favorite method of trading fakeouts, and if I manage to get up very early, because sometimes when I do analysis, when I work to late peak hours, I cannot wake up prior to London session. But believe me, if I would trade now, if every day, I would trade only fakeouts, because in last many months, markets are very nervous. They're very whipsaw. They have many whipsaws and many false breakouts, and we are protected. So let's say that this happened today, okay? But you also you are protected for growing short there. Some traders maybe at the open want to go short because this was the candle prior to London Open, and what happened, they want to go short of this candle because London opens, and it was short, but you didn't trade it. You traded a fake out, okay? This can be a false breakout. Even if this week went to here, it will still be a fake out. If this blue, the first blue color of this candle showed after first 30 minutes of the start of that candle. So 1 hour is the time frame you should trade this strategy, and you go by reversing. It doesn't need to be perfect. It needs to be close to that level. You don't want to trade initial spike. You want to trade that, I will say it literally, switch of the color from red to blue, because that means that candle went from short candle to long candle after the bounce of the important support and resistance level. And candles are blue and red just because that you can remember it easily. I don't need to have red and blue because, you know, short candle, white candle, or whatever your platform shows. You just know how to differ short and long candle, right, on your platform. But this was candles just for new traders and for some traders who don't know basically how to decipher long and short candles. And it's easier because the color will change in this example from red to blue, and you can trade safely, okay? This, let's say that we had level around there. This will also be a perfect setup because the color changed from blue to red, okay? From red, from blue to red, and then it went blue again, but this was not a valid candle because it opened around there. It opened around there, okay? This was a good example. The price went above pivot point and bang, we should open our trade here. And you see this? This was also a good example. The candle went short and it was red here. And after some, let's say 15 minutes, it went blue here and you open your trade. There, look, your risk to reward ratio. 5 pips below, or 1 to 5 pips below the low of the setup candle, you place your stop loss, okay? So guys, fake outs can be even more profitable than breakouts. And now, the link is here. Of course, use proper money management. Oh, sorry. The link is here. I will copy that. I don't know what it, here. I will mark it, copy, and use at your own discretion, guys. I seems you see the link. It's giving me headache, and I will give it here. Okay, use it at your own discretion. As I say, this is a trading strategy of trading fake outs, how I trade fake outs. And use proper money management, use at your own risk, but follow the rules I gave to you, okay? And now, if you don't have any further questions, we can conclude this webinar and try to practice this. I think that you will be most pleased. Next webinar will be very, very soon. Me and Chris will have a webinar soon. I'll show you that to you now. Webinars, okay, here. Trading fake outs is today. Chris will have price action, supply and demand light trading, and Ichimoku. Ichimoku trading is tomorrow. We will show you what Ichimoku is. This is also some different kind of trading, but that is all a good arsenal in your knowledge to how to kill this market, okay, at least. So guys, always watch out for fake outs, especially on that open. If you miss a breakout trade, don't regret it. If you ask me, opens and the first 3 hours of each session, especially during last couple of months, were better for trading fake outs than breakouts. So watch out for these reversal patterns, for these reversal signs. You can also include candlestick configuration around those levels when they switch from blue to red in this case, and candlestick configurations close to these support and resistance levels, so you can trade after the initial spike, you can trade it after that hour passes, so you can leave your trade for more. But if you trade solely fake out by this kind of trading, I usually close the trade after that candle closes. There is time stop. I've told you about stop losses and stops. There is time stop because maybe the next candle will be a true breakout or again some false breakout. So there is why I use time stop for the candle. I use it after some initial number of pips. I don't mind what the pip number is because this is the unique strategy. And if I stay the trade, I will close it at the close of the 1 hour candle. Okay. So guys, thank you very much for listening to me. You can try this strategy on demo and then you can go live. Use proper money management, and I'll see you very soon. Tomorrow I will be doing a new analysis on Euro USD, and maybe I will include also other pairs. For me lately, CAD, Japanese yen are very interesting. Also Australian dollar, Japanese yen is interesting to me, and New Zealand dollar is interesting also, and of course Euro, cable, and Aussie. So I may include also the analysis, or after Euro dollar analysis, I may include some other analysis. But pay attention to that, okay? Now FOMC will start. We will see if something will happen, if there will be some cues for quantitative easing tapering. So we may have a volatile session, we may not have it. We will see. That is why I will do my analysis tomorrow. Thank you very much, guys, for listening. And of course, support Animal Market, support Facebook page, read analysis, listen to our webinars. There will be a lot of webinars coming in, and trade safely. Goodbye, and talk to you very, very, very soon. Cheers.